All right. Good morning, everybody. Hope you're having yourselves a fantastic start to the AM. I'm not quite sure why, but it feels very, very dark here today. I don't know, Jason, if you're here today, but that feels like winter for the first time today. So very disappointed. But happy post FOMC, happy Thursday. Hope you guys are all doing well here. A few things for us to talk about at the start of February, right? We had some data come out here this morning. Nothing too crazy. We've got some 10 a.m. data here drop in, ISM and construction. So we're going to be a little bit cautious around that 10 a.m. handle, but we're definitely interested in seeing if we can find ourselves some clean price action there. Or here today, I should see, right? Yesterday, big dump on FOMC and done pretty impressive volume, and now we're kind of gapping up in the middle of that range. So I would say that my biggest concern here now today is that markets essentially digest that move, right? If we get stuck in the middle of yesterday's ranges, well, there's not really too much for me to do there because this is certainly not a bullish trend day, right? So still want to be a little bit cautious. I don't want to force anything here this morning. And I'm certainly not interested in chasing after any outliers. But a period of consolidation here would definitely set up a Friday breakout. And I'm going to be very interested to see if we can get ourselves some clean PA. Just one sec, guys. I want to grab myself a cup of water. I'll be back in a second here. Sorry about that. So with the SPY, right, the size of its candle, the volume profile that we saw there yesterday, and then the size of the gap that we see here today, what do we think is the most likely outcome on the old SPY? And good morning, Stephen, Gabe, SG, Craig, Ruben, Topher, Ben, Nate, Gary, Joe, and GD. Hope you guys are all doing well. But yeah, what's the most likely outcome here this AM? Yeah, most likely to see consolidation because it's going to take a lot of work or some pretty wild price action to get outside of that range. And a consolidation day here or a period of consolidation after expanded bands makes sense, right? Expansion events lead to contraction, contraction leads to expansion. So would definitely allow us to create that next leg higher. Is this the top? Is this the bottom? I don't know. No one knows. So let's see if we can find ourselves a clean narrative, but it won't be on the index level here this morning. All right. Apple, how do we feel about this? It's got earnings today after close. What does that usually mean? Yeah, no go, right? Too many news narratives. It's been a big sell-off. I mean, this kind of seems like it might be worth a little bit of a lotto play if you could buy one. Not investment advice there, but maybe I'll be buying a couple contracts at 359. We'll see how the day goes, but yeah, could be in play there. Okay, Tesla, what's the name here? What's the style? How do we feel about this bar? What is this starting to look like here a little bit? Hey, Vlad, good morning. Igor, how you guys doing? So kind of hard to see if I can fix this a little bit here. So what does that look like here on Tesla? Hey, Brian, how you doing? Yeah, absolutely looks like a bear flag. Spot on, Brad. Hey, good morning, Mike. How you doing? So if we're seeing a possible bear flag, what does that suggest to us? Here's your flagpole. Big flagpole. So if we're going to be wanting to be bullish, what would we need to now do? What would we need to invalidate, essentially? So if we're saying a bear flag, right, is bearish consolidation, what would we need to do to invalidate that bearish consolidation? Yeah, so we need to, I mean, that's if you want to get a breakout move. We want to just basically make sure that this pattern isn't real, right? So how else could we do that? Because we're not going to get bigger volume than that earnings bar, right? So we always talk about, right, on patterns, we always want to see 3 points of contact, right? So we want to now see that next point of contact on this upper trend line, not really sustain, right? If we could break out, make this upper not really look like anything and fill that gap, then this looks like a trend line bounce, right? So we have to do something here to basically invalidate potentially some of this upper resistance. So that's going to require a pretty impressive breakout above that, say, 197 area. Today, with where price action is at, opening up middle of that range, I don't think this is ultimately going to be in play here for me today, because it's going to need too much work. It's going to have to climb too far before it finally gives me that pop up and over. So if I actually want to think that bulls are going to be strong here, then ideally I want to see a day of consolidation so that when I do get that breakout is happening at 9:37 in the morning instead of at 11:37. And then this way, right, I actually have a reasonable expectation of getting consistent follow through. So it's a complicated way or a long-winded way of saying that this is probably one to watch versus one to trade. Okay, Microsoft. What does this look like? This looks like SPY, right? The ticker or the candle, right, or the price action and the gap up looks very similar to what we're seeing on the index level, right? Similar Bollinger Band shape, similar failed breakout type pattern here. Right, okay, maybe a slightly more aggressive price action, but there's a lot of common characteristics, right? So if we're saying that the most likely outcome on the old spider here today was that it was going to be one to watch versus one to trade, what's kind of our main expectation here then on Microsoft? Yeah, it'll be a day of consolidation, right? So I just got an email that it shows how broken the economy is. I gotta share this with you guys. So I won't say from what company it is, but it says, Michael, your $0 reward is waiting for you. All right, Meta, how do we feel about this? What's going on? Yeah. Yeah. So what does that mean, Brad? Yeah, no go. Spot on. All right, Amazon earnings today after close, right? Same deal. Okay, we're finally getting to some juice, right? Finally getting to some juice. How do you feel about yesterday's volume profile on AMD? What would be your, I would say, point of anxiety on this trade? Or what about this would make us a little bit potentially uncomfortable? Okay, yeah, I mean, fine. Let's keep it simpler though, right? On a specific price action perspective, right? If we're gonna say that this is a doji candle, what does a doji suggest to us? And what does that maybe imply with the increasing outlier volume? Right? So what about the 3 for 3 is kind of undesirable? Yeah, it's indecisive price action, right? It's kind of weak. It's maybe not the best narrative, right? Or it's like high volume indecision, right, is the worst decision. So we want to make sure that on any breakout over, right, we're showing or seeing signs of strength that kind of overwhelm some of that potential momentum. And now, can we explain yesterday's indecision? Of course, right? FOMC post earnings, there's a lot of kind of narratives going on there that could encourage that, but we want to make sure, right, that we are getting a consistent story here on any breakout. So compromising on the candle shape on our 5-minute time frame, or compromising on the volume standard we want to see on the 10-minute time frame is going to be a no-go here, right? Gotta be very, very strict, very disciplined about the candle quality that we're looking for, because that's the least inspiring thing about this setup here so far, right? So although it's a 3 for 3, we want to call this a weak 3 for 3 because there's a certain element here that isn't showing us an actual sign of strength. If the volume is indicating that bulls were very strong, we would have anticipated a stronger candle, maybe even holding one above that 170 barrier. So we want to see that momentum show up. We want to see that reaction kind of come together, and then we can go from there. On the flip side, right, because it's a 3 for 3 and we have evidence of dip buys now being bought up with volume, we can continue to look for that narrative essentially off of that midline on the Bollinger Band. So if we see a pullback here off of 169, nice, all the way down here towards sort of that 163, right? We've got a range where we can now bounce this thing up towards highs. But if we're playing a breakout, we need to invalidate that sort of upper end of decision. And if we're playing a bounce play, we got to make sure we're getting an appropriate pullback to justify that entry. Now, breakout would be ideal here, but we do, again, right, got a little bit of a case of the Teslas where it's got a ways to go here before it gives us that pop. So we want to be patient, we want to be cautious, and we want to make sure it isn't exhausted if it gets there. And we do know that if AMD moves, it can move like crazy. So 1% away kind of breakout certainly isn't out of play, but we want to make sure that we are seeing enough conviction to give us that follow through. And then obviously, right, volume standards probably aren't going to be bigger than what we saw there yesterday, but we'd like to see as a base minimum there an outlier volume standard. Make sense? All right, I was targeting that 180 area. Make sense? Okay. NVIDIA, what's the story here? What's the style? How do we feel about this? Similar narrative, worse narrative, better narrative? Possibly a trend line here. Possibly a trend line there, right? So if we maybe identified a little bit of a rising wedge here at these highs, how do we feel about playing a breakout in the middle of that range? Right, AMD a little bit lower, all things considered. Right, so similar narrative, but maybe just a few points of contact that are a little bit more challenging for us to break out through. Right, more evidence of rejections above us than kind of any dip buy opportunities. And these are all-time highs, right? So those rejections, we have to put a lot of stock into it. So I would say on this NVIDIA, I need to see a breakout basically above all-time highs or like a pretty aggressive, I mean, have to be even lower, like under that 600 area at this point now to want to play a dip buy. So NVIDIA, probably one to watch versus one to trade here again today. So yeah, looking like a pretty thin watch list this morning. Okay. Netflix. You got trend line here, right? 3 points of contact. 1, 2, 3. 3 points of contact on the lower part, right? 1, 2, 3. In the middle of that range. So how would we identify breakout zones here? What would be the fundamentals? What would be our breakout trigger? What would be the volume standard we need to see? And how would we know our next point of resistance? Yeah, spot on. It has to be an outlier. It has to be bigger than anything we've seen so far this week. 100% agree. So it's a 2 out of 3, right? It's a 2 out of 3 without volume. So when we have a 2 out of 3 without volume, we know that that indicates a lack of trending price action, right? So if we don't see trending price action, or we don't see a very strong indication of trending PA, we need to see that trend get established, right? So that's why we want to see that increasing momentum in that outlier standard, because then that gives us that personality shift that we want to see after consolidation. So now we're looking for a breakout through 573. And then what would be the next point of resistance here? Right, be that next point of contact on the trend line, so about 579. And then you kind of have space at that point, right, like 581, and then you kind of go up towards like 600 pretty quick. So do I think it's going to go $6 along the way? No, I think that's probably too aggressive. I'll go 0.5% at a time here. And that gives me plenty of space. Whoops. And I should have a little bit of oomph here, but I got to make sure that the volume is impressive enough. I don't have to worry about this, right? Okay, Coinbase, nope. I mean, still hanging out inside that candle's range, but it's taken a long time here, so it kind of seems like maybe it's catching its breath here again, maybe creating a little bit of a channel. Not quite a failed breakout or a failed breakdown here yet, but we're starting to see just a little bit more compression than I'd like to see inside that range. Okay, Google, big gap down, opening up middle of the range. It's going to be still one to watch versus trade, right? Don't have very much of an edge playing this. I'd like to either play a fake out lower, bounce off that lower trend line, yada, yada, yada. It's not really in play. It's kind of pathetic volume for earnings on BA, right? I don't think I'm soft for saying that. I wonder if this is a trap. This little breakout, maybe a trap. Yeah, beat earnings expectations, but said they don't want to issue forward guidance. So it's kind of like, I don't know. That feels kind of sneaky. Oh man, I am so. I can't get over how dark it is outside. Sorry, guys. I don't know. I feel very limited with what I see out here today. Very limited. Oh, Joe, that's the worst. Winter weathers, man. They're the worst. Oh, I mean, just generally, earnings should be like some of the biggest volume you see, right? And I've seen bigger volume just from like a news event, right, recently. Now, okay, a door getting sucked out of a plane is a pretty significant news event. But, I don't know, it just shows that like no one really gives a shit, right? It's just inconsistent compared to everything else. I don't know. BA might be one of those dog shit companies now. Really don't see much, guys. To be honest, I got AMD and Netflix on my watch list. That's it. Yeah, you have an opportunity for that BB reversal setup, absolutely. I don't like, though, that the close couldn't hold previous day's high. It's a bit suspicious. So I'd probably want to see a fake out lower first, see bears fail first, and then. You guys looking at anything else here this morning? Hey, Suresh, how you doing? Hey, Tanja, how you doing? Guys, any other requests, any other names you're looking at here this morning? Like I said, not expecting a very, very busy session. We have the remnants of yesterday's earnings, yesterday's FOMC, and then a crap ton of companies reporting after today's close. So I'm being very patient, right? I'm not getting too much reason to front run those narratives here yet. But I'd like to see some PA in the names that I do have, although I'm not, like I said, not super convinced that I'm going to get the best opportunity here regardless. So be quiet here, be patient. Not going to allow the rain and the darkness to impact my trading here this morning. And if I have to be quiet this week, I have to be patient this week, or I have to sit on hands this week, no worries. Got one win, one trade, that makes me happy. I don't need more. Right? We focus on the variables we can control. We don't rush into decisions just for the sake of it, right? I think in my experience working with traders, thinking about my own trading, the people who are always in the biggest rush to make money are always the ones who end up losing everything first. Right? So we can't allow that pressure to trick us into making decisions that we don't want to make. And we have to realize no matter how much outside noise there actually is, that we are slowing down and focusing on the things we can't control, right? So I know it sucks, and I know it's challenging sometimes to sit on hands. I know it's tough to admit that maybe it's going to be a slow, quiet day. But it's the silent killers, right? Like those are the ones that make big money. It's the ability to compound right? That's what makes us big money. And so I get it, right? I know it's boring. I know it's not as fun, but this is what we have to be obsessing over, right? Especially right now, we still got 7 minutes to go before market open. I'm still thinking relatively rationally, right? And so it's easier for me to protect myself from myself right now, right? I can set up better expectations of what trading performance should be like here today, or I can set up realistic expectations over what I can expect from the market here today. Or I can tell myself, okay, Michael, this week you were rushing your entries, or you were bad at closing your losers, or you were doing whatever it might be. And so, okay, here's today what I'm going to focus on. You have this time, right? Every day I always try to say that I'm going to spend a few minutes visualizing my trading day, making myself a cup of coffee. And what that is essentially I'm going through my trading plan in my head and seeing myself scale out at my levels, right? I'm seeing myself close my trade for a small loss. I'm seeing myself get stopped out quickly. I'm seeing myself get into an entry after it's pulled back into my entry zone. So I'm trying to visualize those details. I'm trying to make it easy for myself to see what that success feels like, right? To see what that looks like, to see how I'm going to be calm when that price action pulls into my zone, so that when it does occur in real time, I've already done it, right? I did it 15 minutes ago, or I did it 10 minutes ago, or I did it 30 minutes ago. And I can take a deep breath, I can close my eyes, and I can visualize, right? Price pulling into that 236 fib level. I can see myself getting the position sizing that I need. And so I can then reinforce, right, the sort of visualizations and the techniques and the reminders that I wanted to create for myself at 9:20. I can reinforce those behaviors and feelings at 10:30. So really want to obsess over those techniques, really want to obsess over controlling those variables, and then we can go from there. So Microsoft, right? We're essentially opening up in the middle of its range. So if I'm going to get a breakout, it's got to be to the upside here, right above 416. That's likely not going to be it happening here today. And if I don't have enough evidence here yet, right, to suggest that this is going to be more than a one-off or two-off day, right? So last earnings, same thing happened, big sell-off, and then created that next leg up. So the reality here is I want to see more evidence of bears actually showing me momentum before I get that next leg. Sure, but you could make that same argument for Microsoft, right? Microsoft had earnings the same day as, or had the same kind of like time prior to earnings, right? Like a BA, had it after close instead of before open. So that still gave us plenty, right? Yeah, let's take a look at MasterCard here. So Craig, what's the count? Yeah, 2 out of 3 to the downside, right? So what would be the scenarios that you're historically looking for inside those market conditions? Nope, it's incorrect, right? It's not a Bollinger Band reversal if we have volume, right? So this argument here is saying that you have trending price action to the downside, right? Strong red candle, strong red volume tells you have a bearish trend. So you don't want to go Bollinger Band reversal when you have a bearish trend, right? You want to either look for a rejection off of that 460 or a breakdown, right, under 446. So now if you have a 2 for 3 with volume, right, to the downside, and you have what you think is a bullish market, this ultimately tells you a different story versus what you think the trend is. So this should be, unless you have a bearish narrative that you're willing to execute, one to watch versus one to trade. Okay, 2 minutes here, guys, to market open. So I'm just going to step away for just a brief minute here. Only got 2 names to go over in my head, so I'll be back at it in a second. And we'll do a quick little rundown of AMD and Netflix as the session is kicking off. All right, so that's market open here, right? On AMD, we're looking for either a dip buy inside that green box or a breakout over 172. And then on this Netflix, what I'm looking for here is a breakout over 573 for a kind of a continuation move up towards sort of that 580. Again, right, we've got so many names reporting aftermarket close that it might just not be in play here today, right? It might not be the busiest of sessions. And so I'm not going to trick myself into thinking that something is there when it isn't, right? So again, a lot of what that can be is knowing your weaknesses, right? If you know that you get caught inside a slow market and you tend to overtrade, well, the best thing to do, right, is not put yourself in a situation where that is inevitable, right? So how do you break habits? Well, how do you break routines? You change them. You walk away. You do something different than what you've been doing, because what you've been doing you clearly can't avoid. So this is why we set those expectations, right? Because it's easier to walk away now than it is when you're in the middle of a trade, or it's easy to walk away now versus when you've developed an emotional attachment to which direction you think the market is bound to go. So we got to think about those variables, right? We have to obsess over how can we protect ourselves from ourselves so that we don't, right, get in our own way, so we don't self-sabotage ourselves, so that we realize that, hey, I'm actually an idiot when it comes to my trading, so let's make sure that I'm not an idiot and blow up my account, right? So it's like almost like being humble, right? I realize how dumb I am, so let's make sure I don't do something dumb. And I constantly get in my own way, and we all constantly get in our own way. So like I said, our obsession has to be about protecting ourselves from ourselves. It's all a choice, right? No one has a gun to your head telling you got to pull the trigger, or telling you should be over trading, or they should be doing anything along those lines, right? What I'm suggesting, and this is about no one specific, is that we all have demons, right? And we all have things that influence our trading decisions. And it's a choice to allow those things to continue to impact our outcomes, right? It's a choice. It's a choice to overtrade. Somewhere between you having that idea and you executing your decision, there is an impulse that you are listening to that you need to fight back against, right? And if you're going to continually reward that impulsive decision or that impulsive feeling or that process, then you're not taking a level of accountability that you need to actually make money trading, right? If you know that you overtrade and that you can't trust yourself to make 10 decisions a day, why do you constantly take 10 trades a day, right? It should be after my first trade, I walk away, right? If you know that you constantly blow up after your first red trade, why do you take another trade after you've had a loser, right? It's a greed thing. It's a selfish thing. It's a choice, right, to make back everything right away. It's a desperation. It's a desire to give away control, right? Well, that's not how it works. Give away that accountability over your outcome, then you give away your outcome. I think too many traders, and you guys can think about if this is relating to you or not, but too many traders think about how much they're going to make versus how much they can actually lose, right? They're not prepared to lose. And because they're not prepared to lose, they lose everything. And then when they've lost once, they think back to their trading and they say, oh man, I was up $1,000 on this trade. I was up $1,200 on this trade. If I just took it, I'd be green. If I just did whatever, I'd be green. Oh, if I just cut my loser, I'd be green. But the reason they didn't do so in the first place is because they weren't planning, right? They didn't have an idea of what they wanted to do. They were making it up. They were feeling how it was supposed to be. And so it's, of course it doesn't work, right? Of course you don't make money. Being desperate to change your circumstances in life shouldn't force you to make more decisions, right? It shouldn't force you to change your process, to take unnecessary risks. No matter how hard you try, you're not one trade away from being a millionaire, right? You're not one trade away from saying fuck you to your boss. You're not one trade away from creating your ideal financial situation. So why are you behaving, right, as if you are? Why are you letting then one trade take away your opportunity to live the life that you want? Right? That's the way we have to be thinking. So if I know I can't make everything on one trade, why would I be willing to lose everything on one trade? Right? So I can't behave that way. So if I know I can't behave that way, then I have to protect myself from myself, right? It's like that. It goes full circle. So like Joe was saying, we can blow everything up in one go. We can blow everything up in one decision. And so how can we make sure that that decision doesn't ever escalate to that point, right? Everyone has a number that breaks them as a trader. Every single individual. I don't care if you're worth $1 or $1 billion, right? Everyone has a number that puts them on tilt. But it's what you do after that happens that defines you, right? I feel like there's, like, if you want to feel something, right, after your trade, punch the floor. Don't punch another order ticket, right? Hell yeah, Joel. Hell yeah. So AMD might give us that dip buy scenario. Not in play here yet. We still want to wait a little bit for that. Netflix, $2 away from a breakout. So again, could be in play, but still a little bit of work to go here. One of my favorite sayings, or one of my favorite, especially when things are difficult, is I like to think, or I like to remind myself, I should say, that if I want to be in the top 1%, then I can't behave like the other 99%, right? And it's not to say that I'm like, I'm trying to tell myself that I'm better than people or that I'm whatever. It's not that, right? It's that when other people would give up, I'm willing to push, or I tell myself I'm willing to push. Where other people would rush, I'm willing to be patient, right? So sometimes what we have to realize, right, and we can use this in a lot of different ways. So if the idea here is that the majority of traders are unprofitable, what is the opposite that you could do that is contrary to what most unprofitable traders do, right? So Charlie Munger was really famous. He had a speech, right, that it was, I don't know what will make me happy, but if I study people who I think are 100% unhappy, then I know what to avoid. And so it's kind of the same thing with your trading, right? If I know that when I take 10 trades a day, or I trade with this kind of position sizing, or I'm not defining my risks before I enter, or I see this consistently from traders, right, on social media, from your friends, from clients, well, then you know that, okay, if I do these things, then I'm almost guaranteed to never make any money. So why would I behave like 99% of other traders if I want to be in the top 1%? It actually is contrary to what my objective is. It is illogical for me to continue behaving that way. So why would I reward that feeling? Why would I reward that guy, right? Makes no sense. And I think there's an idea of a freedom number. I do believe in that concept. But I think most people are thinking about making 100K a month before they've made 10K a month. Right? And because your goal is 100K, or it's to be a millionaire, or it is to do XYZ, you skip steps, right? You do things that you think are going to get you there sooner in the moment, but actually take you further away. So we can't behave that way, right? If we're actually serious about it, then we can't behave that way. And when you study other winners in any discipline of life, it's the people who are steadily consistent that constantly achieve their objectives. Right? Like another great example, Warren Buffett has made the majority of his money from the age of 65 onward, right? So he's made more money in the last 30 years than he did in the first 60 because he just consistently kept compounding. So, I mean, even if you're just making $50 a day, right? That's going to get you there faster than if you make 3K one day and 4K another. So we got to stop living and dying with these short-term P&L dopamine rushes. A 3K day is not going to now change your life, right? But if you allow that 3K day to now start to make you feel like you've made it, well, then it will change your life, right? Because you're going to blow up your account. You're going to start making decisions that you don't want to take. You're going to start compounding mistakes in your trading, and you're going to take away your actual financial potential from yourself. And it's a life-changing decision with an unintended consequence. I'm sure many of the OGs have heard me say this before, right? But what feels best for our account in the moment is rarely what is best for our account long term. It's the same thing with the power of compounding, right? What we think is going to compound us the fastest in the moment, it's very likely going to actually push us further away from our goal. Right? Your edge, should you choose to accept it, regardless of what you think it is not your strategy, right? It's not your ability to make winning trades. It's your ability to keep the capital that you generate. So if you make your edge risk management, that you lose better than anyone else, then I guarantee you're going to make so much money that you're not going to know what to do with it. Right? So your edge isn't that you can get bigger wins. Your edge isn't that you get more follow through than others. It isn't that. It's that on Friday afternoon, you make more than anyone else because you keep more. You're more obsessed about keeping than making. And I will say this, that I don't think most people believe that. I don't think most people are more obsessed about keeping what they make versus whatever, right? I mean, I think a big problem with traders is they have a 5K day and then they spend that evening looking at $1 million houses or that new Mercedes Benz, or, oh my gosh, 2 more days like this and I can afford a Submariner. Like they spend that capital, or they spend that dopamine before it's real, right? They trick themselves into thinking they're hot shit, that they're Gordon Gekko, right? Because they've had one nice day. You can't do that, right? Can't fall for that trick. Can't fall for that trap. That tricks us into skipping our, like, what we know actually works, right? Tricks us into skipping and avoiding the power of compounding. So we can't do that to ourselves. That doesn't work. That doesn't make us any money. Right? That just takes away all of our progress. Right? Knocks us back to the Stone Ages. So I think most people, or you know what? I'll phrase it differently. You have to train yourself, I think, to feel that losing feels worse than winning feels good. Does that make sense? Right? So a win will never feel better than how bad a loss feels. And so if I'm dreading losing more than I'm looking forward to winning, then I don't think I'm going to make rush decisions that get in my way, right? Now, that doesn't mean I'm scared of losing. 100% no. I know what my limits are. I know what I'm willing to lose. I know what I can afford to lose, and I know what that number will be before it ever happens. There are no unexpected P&L hits, right? It should never be a surprise. Because if it's a surprise, I didn't do my job well enough in preparing. I don't dread winning, right? That's not it. But trading is my job. And so I can't allow the dopamine rush of a win or a loss to make me a sloppy worker. And if we're trading or we're judging our self-worth or our value or our contribution or I think it's just self-worth, right? If we're judging our self-worth based off of our P&L, then we're never going to be happy, right? Because there's always someone who makes more. There's always someone who has a better win rate. There's always someone more successful. There's always someone flashier. There's always someone spending more. So it's a slippery slope, right? And when we're in such a rush to make the money that we feel like we deserve, then we attach an emotional outcome, inevitably, right, to how successful of a trader you actually are. So now you're unprofitable and you think you deserve it, which you do, but you can't walk around with like that air of arrogance, right? Like, oh, this is mine already. But once that happens, right, and you cross that threshold, then the game starts to feel rigged against you. And it starts to feel like things don't work and that everyone but you can do it. But you got to that point with a self-imposed decision because you allowed your mistakes to continually compound because you weren't willing to take that accountability in the first place. So again, right, this morning's theme, this week's rant in general is how can we obsess over protecting ourselves from ourselves? We are constantly our worst enemies, right? Constantly. So if I know I'm always getting in my own way, how can I obsess over that? How can I obsess over making sure that prick who sits on my shoulder, who tells me to rush decisions, can't actually cost me my dreams? And if I can obsess over silencing him and his ability to control my actions, and I can obsess over taking responsibility over that, then I can start to think rationally and I can start to behave as if I have control, and I can allow trades to come to me, and I can allow my system to play out without anxiety, and I can feel like I'm making trading decisions that aren't rushed. And when I start to behave with that level of control, then I have a level of predictability over my P&L curve, right? I can reliably predict that I'm going to execute over the course of 10 trades, 100 trades, 1,000 trades. And so I can be calm because I know my next win is coming. And I know that I'll be able to manage my losing trade. And I can know that I can survive drawdown. And I can do all these things. And then that confidence compounds into knowing that you can actually turn this into something special. But if you're in a rush, right, and you're going to ignore big wins in search of bigger wins, then those big wins are going to turn into big losses. And those big losses are going to turn into 9 to 5 days, right? And they're going to turn into shackles that totally erode at your ability to create your own freedom. So we can't succumb to those weaknesses, right? We can't succumb to those forces that are trying to bring us down. And it's like a comfort thing, right? We default into doing what is easiest, not what is best. So the easy decision is to impulsively trade, right? The easy decision is to not think about what your P&L will be if you get stopped out. The easy decision is to not adjust your position sizing to account for that extra risk, right? The easy decision is to not take your profit out on the way up because you think it's going to keep going. The easy decision is not planning out all your trades before they go. And doing all these easy things consistently does not create the outcome that you want. So to now go back full circle, right? I know that 99% of traders take the easy way out. They don't take that accountability for their decisions. So if I want to be in the top 1%, I cannot behave like the other 99%, right? So I can't be willing to make those easy decisions. Right? When people say, okay, time to enter, it's time to take a breath. What's the hardest thing I could do there? I wait, right? It's the hardest thing. When I want to enter a trade, what's the hardest thing I want to do there? It's to wait. And if I can train myself enough to do that slowly but surely, right? Decision by decision, trade by trade, right? Concept by concept, then I can actually reset some of the dopamine triggers and turn trading into a winning habit, right? Just like how impulsively following your trades or impulsively following your ideas or ignoring a big win feels natural, that you can turn scaling out on the way up to feel natural, right? You can turn buying on a dip to be natural. You can turn sizing your position to account for that extra risk to be natural, right? You can make winning a habit, but that's a deliberate choice. So that's like a social contract, right? You have to make with yourself. And it's the difference between winning traders and losing traders. Now, everyone here who's listening or who has ever listened to me rant about trading or psychology or anything along those lines has had that conversation with themselves before, right? They've said, okay, I'm going to get my shit together and I'm actually going to make this thing work. But again, right, 99% of people don't make their actions match their words. So how can you do that, right? Well, you got to take accountability for those decisions. First principles thinking. Where is that first point where I make a mistake that leads to me losing control? How can I take accountability of the pattern of events that occurs prior to that happening? How can I take control over how I react at that area? Or when that moment comes. And if you can start to think about your pattern of behaviors, then all of a sudden, right, when that situation occurs in real time, you're going to be more aware of it, right? You're going to be thinking about it. You're going to be making that plan at 9:25 to how to basically hedge yourself against that risk. So besides like a risk management perspective, my biggest risk as a trader is that I'm going to get in my own way and prevent myself from achieving the things that I want. I am my own biggest enemy, right? Me, fundamentally myself. So it isn't Greg, and Joel isn't Greg's biggest enemy, and Craig isn't Topher's biggest enemy, and it isn't anything like that, right? It's us. It's just all on us. It's all on our ability to choose how much control we want to have. Most important book that I've ever read in my entire life is Man's Search for Meaning by Viktor Frankl. And that book's pretty intense. And it's call it modern take on Stoicism, right? Or it's the often credited as the revival of Stoicism. And what Viktor Frankl noticed was that the people who survived in concentration camps during World War II, who survived from start to finish, were the ones who always controlled their mindset. That was their last and ultimate freedom. The one that could never be taken away, no matter how much they were degraded, no matter how much they were abused, no matter how much they were pushed. They could always control their attitude to the circumstances that were kind of around them. And the people that were resigned to their fate and accepted doom and death and whatever were dead within a few days. And the way he said he visualized this, right, was that in Auschwitz, when you were put into the camp, you were given 2 cigarettes, right? And most people, or at least most smokers at the time, would smoke their first cigarette within the first week. And then they'd hold on to that second cigarette as something to look forward to, right? And he said when he saw people smoking their second cigarette, he knew that they'd be dead within a few days because they'd given up. They had mentally told themselves, you know what? I got nothing else to live for. And so I'm going to stop. All right, I'm going to enjoy this one last pleasure and that's it. And in trading, it's the same thing to a certain extent, right? Now, obviously, the consequences maybe aren't so life or death, or the circumstances here aren't as dramatic. But if you allow yourself to succumb to that impulse and you take that trade you know you're not supposed to take, it's kind of like smoking that cigarette, right? It's admitting that you don't have, you're giving up, holding out for what you're actually going for, right? Man's Search for Meaning by Viktor Frankl. And that's a choice, right? Believe it or not, that's a choice. To succumb to that impulse is a choice. To take a trade that you don't want to do, right, is a choice. And it's something that we have control over. And taking control over that accountability, over that decision, over that process, I think is the ultimate determination of how successful you could actually be. So there's 10 a.m. I mean, AMD not exactly moving. Netflix got close, but no cigar. Why would you trade it today? It's got earnings after close. So why would you trade it? Why are you succumbing to the impulse of the volume? You didn't have a plan for it today. You didn't have a thesis that you knew you could execute pre-market. We decided it wasn't tradable today because there's no reasonable expectation of trending price action. So why fall for the impulse? No, what you missed is making the plan though, right? What you missed is the proper preparation. Right? Mistakes compound, right? So if we skip a step early, then we skip steps later. Right? Why do I spend 40 minutes every day doing my pre-market prep? Right? Why do I stream that for you guys? Surely it would be better to sleep for an extra 40 minutes, right? And just wake up and just go for it. Right? Surely it'd be more fun. But 99% of traders don't plan their trades. 99% of traders miss that there's earnings. 99% of traders make it up as they go. And if I want to be in the top 1% of traders, then I can't behave like those people, right? And then I can't make excuses for myself that I missed such an important piece of information. Because if I'm willing to miss something like that, what other detail am I willing to overlook? Where else is like my decision eroding, right? Where else am I making a thoughtless mistake that is costing me thousands? Where else am I impulsively rushing into trades just for the sake of a trade? Like, fuck, man. Why? Yeah. I think there's a level of addiction to losing for a lot of people, where I've been doing the same thing over and over and over and over again, and it's never worked, but this time it will. It's like that Arrested Development meme, right? Where it's like 97% of couples who go to couples counseling talk themselves into it working, but it never works. But it's going to work for us. right? Like, aren't you tired of making the same mistakes over and over again and then consistently costing you money? Hasn't that cost you enough sleepless nights? What else like do you need to get to change your behaviors, right? How many other social clues or cues or pieces of evidence that you need to suggest that your trading isn't working, that the way you're behaving isn't working? Isn't that enough of a motivator to want to change? Yeah. Like, and that's why everyone should be here, right? Like, you guys shouldn't be here just for entertainment. I used to get better. It's to start kicking ass, to fix habits that cost you money. Like, just as an example here, right? We're 35 minutes into market open. I haven't looked at my execution platform once here this morning. Not once. Do you know why? Because I know when I stare at my execution platform, I talk myself into a trade. So out of sight, out of mind until it's showtime, right? Do you know why? Like, I'm zooming out and not like super zoomed in, staring at every tick as closely as I possibly can? Because this makes me feel like moves are more dramatic than they need to be, right? So it's like everything's deliberate, right? Everything is to make it as easy for myself to be as consistent as possible, to be as emotionless as possible. So what are we waiting for on this AMD to play a reversal? What would we need to see? Yeah, and we'd like to see probably back above outlier 2 and then expanded Bollinger Bands, right? We want to make sure that we're not seeing compression. We want to see essentially like a failed move. Guys, any questions here? Any questions about today's price action? Again, we talked about not expecting it to be a very particularly busy session, and we've seen inside bars and consolidation pretty much across the board. Even in general here this week, there's been very few alerted setup triggers. So it's been pretty quiet, pretty chill. And I'm not getting too many reasons to force much price action. Right, so much consolidation here. Yeah, so I really don't feel like I'm missing out on too much or like I should be forcing any trades here. So happy to answer any questions, but I can't imagine I'll be doing anything very aggressive. Sounds good, Mike. You have yourself a great day, man. We'll see you tomorrow. Yeah, that's why that 90-minute rule kind of comes into play here, Gary. Right? I find that once I'm staring at the market for more than a couple hours, I kind of get tunnel vision. And I overestimate how little something is actually going to move. So I tend to actually lose money quite significantly once I start trading too aggressively outside of those hours. So yeah, if I don't get a look first 90 minutes, first 2 hours, first 30 minutes, whatever it might be that day, then I'm pretty happy to walk away. Now, if there's reasons to still be interested, I'm seeing crazy volume, it's an outlier day, no problem. But most days, if I don't get a look early, I don't get one at all. So why fight that, right? That's the point, right? If I have to rely on emotions to make decisions, then I have historically and consistently proven to myself that I do not make the right one. So that's the reason why we try to make as many things binary, right? Either happens or it doesn't. There's no sitting around, there's no hoping, there's no waiting, there's no emotional attachment to something that is so black and white. That's why we try to do that with our entries. That's why we try to do that with our pre-market prep system. It's why we are so methodical, because it removes the emotion from our decision-making process. And the less emotional our decisions are, right, the generally better they're going to go. You guys, any questions here? Anything you want to go over? But I don't think I'm going to get a look here. So yeah, any questions, guys? Any questions? Otherwise, I'm going to take off pretty soon. Awesome, Ben. I'm glad that's helpful. And that's the point, right? We figure out what we want to track. We figure out the data points we want to look out for. And then it goes well. Yeah, you got that open up lower too, Brad. I think that was perfect. So nice work. Glad you had a plan. You had a good technique. Worked out perfectly for you. So yeah, man, fantastic, Brad. Awesome, awesome. Brad, make sure you put that Qualcomm trade into the daily debrief when you have some time. Would love to see the details of it. Sounds good, Nate. We'll see you in the morning, man. All right, guys. So final call for questions here. Final call for questions. Sounds good, Ben. You have a good one, man. We'll see you tomorrow. My pleasure, Gabe. You have yourself a great day, man. All right, guys. So if no further questions, I'm going to kill the stream here for the day. Hope you guys all have yourselves a fantastic afternoon. Same deal like always, right? If you have any questions, hit me up outside of market hours, and I'll do my best to get back to you as soon as I can. Otherwise, have yourselves all a great one, and I'll see you all tomorrow for hopefully a strong end to the week. See you then. Peace.